Okay, Dan Fitzpatrick here, stockmarketmentor.com. I want to look at Applovin today here, or Applovin, however you want to say it. Hey man, it's your language. Talk however you want. Anyway, so I went into a lot more detail on this in tonight's premium strategy session, but I thought I'd cover it here in the freebie because I think it's really important. So I just want people to learn and get better. So we bought this stock on July 3rd, day before the 4th of July. Third is always the day before the 4th. And on this breakout, it worked really well, right? But then the next day, it worked really well, but it just absolutely got slammed into the afternoon. And so ultimately, days later, got stopped out at like 82.40. I forget. It didn't happen. It didn't happen here. Happened a couple days later. So this was an unprofitable trade. And now you're going to have unprofitable trades, but I have to say that this was a bad trade. You can have great trades that just turn out not to make money, but this was a really crappy one. And this is why. I thought that the entry was really good. Okay, awesome. Boom. I like it. Volume, little sub average, but it'll do. The next day we get this. Okay. When the stock goes from this to this, this tells you that this breakout is not going to work. And so at the very least, you should be saying, all right, well, screw this 82.40 stop. If this thing goes down the next day here, I'm out of here because this isn't working. And I didn't get married. I just took this stock out. It's like, it's just lunch kind of thing. So I'll just grab the check and go. And then that's exactly what happened. So I should have been out of this trade right away. I wasn't. Wind up getting stopped out, losing some money. And now I'm back at this. And I just put this back on the list. And here's the reason I'm showing you this, because you might think, okay, well, this is back on the active trade list. Dan's trying to get back at this stock, and it can be a challenge for people. I mean, it was for me ages ago. It's not anymore because I got tired of losing money. But when a stock costs you money, there's a tendency to say, oh man, that really pisses me off. I'm going to get that stock. And the stock doesn't know you. It doesn't care about you. And if it did, it wouldn't like you because you don't care about it. You're just trying to make money. So when a trade is over, the trade is over. Boom, move on. I'm looking at this as an entirely new trade, a different trade. Whereas this was a breakout trade, this is a pullback buy. And so you'd be buying the stock here and then maybe keep a stop like right underneath the 50-day moving average. So you're risking 5% at the most on a trade like this. So again, it's a different trade than a breakout trade. This is a pullback trade, but you can see where you're defining your risk here. And then if the stock runs up, you're going to make money. If it doesn't, if it falls, you're not going to lose that much money because you've defined your risk. Okay. So that's all I got for you members. I'm showing you a lot of stuff about keeping stock lists in tonight's strategy session. So definitely check that out. And if you don't like my slow voice, you can speed it up. Okay. All right. Talk to you guys later. Have a great weekend.